Today is Fed Day, and that means Wall Street will be paying attention to comments from the central banks. But we continue to see record highs for equity prices. So here on the trading floor is Keith Bliss of Cuttone Co. Keith, great to have you here today.
Thanks, Remy. Always good to be with you.
Well, today is Fed Day, and that means we'll be paying attention to what the central bank says in terms of projections. But of course, we continue to see those record levels for the equity averages. So what do you think about valuations right now?
Depends on what metric you're looking at. Obviously, with traditional PE, S&P 500 PE ratios, it's a little extended, but we've been there for 5 years now. So what's to say that things will change at all? If you look at other metrics like S&P valuation to book value, for example, price to book value, that's actually right in line where we are. A lot of that has to do with the fact that companies have been buying back their stock over the years and therefore reducing the outstanding shares, which will change that ratio. I think what we need to remember is, given the environment that we're in, I think the Fed has probably threaded the needle as best they could. They stimulated the economy with monetary policy for as long as they could, and now they really got a gift in the fact that somebody like Donald Trump got elected. Not that Donald Trump will make a great president, but his rhetoric as it relates to regulation and tax policy and fiscal stimulus now can carry the torch beyond what the Fed was able to do. So you ask a question, is the stock market overvalued? Maybe by traditional metrics, but I wouldn't be fighting the tape right now. This thing wants to go higher.
And another event we've been paying attention to is the OPEC gathering. Now, we have that event risk out of the way, obviously, and we did see both the OPEC meeting and the meeting between non-OPEC members produce output production cut agreements. And oil prices remain elevated above $50 a barrel. But heading into the new year, where do you see energy going?
Well, I think there's always going to be a cap on crude prices because now that crude, both WTI and Brent, has sprinted back above 50 and towards $60 until it sold off a little bit the last couple of sessions. Once you get up to that level, people in the Permian and Bakken Shale regions are going to start pumping as much as they can. So that's always going to keep a lid on crude. You also have to look at, I think the other thing that's happened to crude is, if you look at some of the cabinet members that Trump has put forth, certainly around Secretary of State with Rex Tillerson from ExxonMobil, the Energy Department with Rick Perry from Texas, what the person that they're putting in for the EPA, these are all signals that we are going to frack, baby frack, as much as we can, as much as it's economically viable. So again, that's another reason why you're going to have a cap on energy prices. We've seen a lot of money rotation into energy stocks over the last week because of the agreement out of OPEC, because of the non-OPEC members outside of the U.S. agreeing to their own production freezes. I think we're going to get a run up in energy stocks, but it's going to be limited based upon where we're going to see crude, which will probably be capped at $60 a barrel for the foreseeable future.
And Keith, now that we've got your take on energy, I do want to ask about the indicators that you're watching. You're always watching some very interesting pairs in terms of commodities as well as other indicators. So can you tell me what you're watching right now?
Sure. Well, a couple of things that we're definitely watching have to do with the dollar-euro currency pair. The dollar continues to be a little bit overbought relative to the euro. I think that condition is going to stay there, and typically that's a condition in about 75% of the cases that should be weak. That is a pair that I look at and a pattern that's weak for U.S. equities. It just hasn't come to pass yet. And again, I think there are outside influences on the equity market which are keeping it frothy at this point in time. The other thing that I'm watching, kind of contra to a weak equity pattern, is we watch breadth inside of the U.S. equity markets pretty closely across all of the different exchanges and places where you can trade, and that has been growing in strength over the last few weeks. We continue to see a market that's trading at higher levels through the end of the week. We could get a condition which I think will produce another 2 to 3% inside of this run over the next 2 to 3 weeks. So given that, a lot of people have been asking me, we're a little weaker today, Dow 20,000, absolutely. If it doesn't happen this week, it'll happen next week. Next week is the strongest week of the year for equities, the week before Christmas. December is the strongest month. The week before Christmas is the strongest week in the strongest month. So I think you'll see this play out, and once we get up close to these magic levels, 10, 15, 20,000 on the Dow, it becomes like a magnet for both the humans and the robots. So that's where I think we'll get there.
Well, Keith, it's amazing that we're even looking at that 20,000 level. So thank you so much for your insight as always, and thanks for joining me again.
My pleasure.